Australia and Canada are about 14,000 kilometres apart, but they have a lot in common. Both nations are a member of the Commonwealth of Nations, sharing a British colonial heritage, and their governments are similarly structured as federal states and constitutional monarchies. Both nations also manage the unique challenge of having relatively small populations spread across vast and inhospitable landscapes. What's particularly fascinating about their geography is that nearly 80% of Canada's population lives within 100 miles of the US border, while Australia sees a similar concentration of its population along the coastlines. If Australia and Canada were one economy, they would be the world's 5th largest, bigger than India and just behind Japan. They both have similar levels of GDP per person, with Australia at around $63,000 and Canada at $58,000, when you consider how much you can buy with that money. In terms of economic structure, both countries exhibit striking similarities in primary production sectors such as manufacturing, mining, and agriculture. However, Australia leans more heavily on mining and less on manufacturing compared to Canada. If you look at how their stock markets have grown over the past 30 years, you'll see that they follow a similar path. That's because both countries' economies are highly dependent on exports of their rich natural resources around the planet. The strong correlation between the two is unsurprising. Back in the late 1800s, the gold rush made the town of Charters Towers in Queensland so wealthy that it even opened its own stock exchange. Now, over 100 years later, Queensland is feeling the effects of another mining boom coming to an end. The ups and downs of the mining industry are tough, but Australia has managed to stay strong through it all. At its peak, mining investment was so big it made up 9% of the country's GDP, especially when Australia was rushing to supply China with iron ore and coal, leading to a huge spike in profits. But when the demand and prices for these commodities dropped, mining companies stopped investing in big projects, which led to less spending and fewer jobs. Similar booms have occurred in Canada. In the 1950s, Canada witnessed the first significant oil boom in North America. For most of the past 30 years, rising investment in oil and gas has supported increases in crude oil production volumes and export values. Over time, as technology advanced and oil prices rose, the focus of investment in oil and gas projects shifted towards oil sands projects in Canada. However, since 2008, falling oil prices have put a damper on things, slowing down economic growth from Western Canada all the way to the central provinces, leading to a contraction in the services and manufacturing sectors. Their worlds of business are near identical too. For example, Macquarie, an Australian company, is the biggest manager of infrastructure investments in the world, and Brookfield from Canada is right behind it. However, when you look at the biggest companies globally by revenue, according to Fortune, you'll see that 6 out of the top 10 are either American or Chinese, while the top Canadian firm, Brookfield Asset Management, is ranked only 117th, and top Australian firm BHP Group, a mining company, is ranked only 180th. This shows Canadian and Australian firms have forgotten how to compete. It also seems as the world's largest economy is a model of perfect competition. In Australia, the two largest supermarkets, Coles and Woolworths, control 59% of the grocery market. Over in Canada, Loblaws and Sobeys together sell 34% of all groceries, which is even more than what the top 4 grocery stores in the US sell combined. When it comes to banking, the 4 biggest banks in both Australia and Canada hold on to 3/4 of all the money deposited by people, while in the US, the top banks have less than half of that. And it's not just groceries and banks. In both countries, domestic aviation is a duopoly and telecoms a triopoly. The list goes on. If companies need to reach a certain scale to be economically viable, for instance, to afford necessary investments in computer systems, then a small economy may struggle to sustain more than a few players in various industries. Notably, the Australian-Canadian national champions, particularly in groceries and banking, are significantly more profitable than their American counterparts. Fittingly, Australia has produced a number of top surf clothing labels, just as Canada has developed a niche in parkas and other winter wear. And, of course, both are home to commodities giants. Canada boasts the world's fourth largest proven oil reserves, with massive reserves in Alberta's tar sands. Along with crude oil, Canada's major commodity exports include natural gas, coal, and iron ore. Australia dominates in coal and iron ore, and is also the biggest producer of lithium, the third largest producer of cobalt, and the fourth largest producer of rare earths. By 2030, it aims to become a globally significant producer of processed critical minerals. But there's a flip side to this story. Both Australia and Canada are finding it tough because they rely a lot on sending their goods to bigger economies. Australia, for instance, is really tied into China. Since China is the second biggest economy in the world, it's a super important trading partner for Australia. A big chunk of what Australia sells abroad, like iron ore, coal and natural gas, goes to China to help power its huge manufacturing and energy needs. In 2023, these goods made up a big part of Australia's earnings from exports, which really shows how much Australia counts on China's business. In the same way, Canada's economy is really tied up with the United States. It's a big deal because the US is Canada's #1 trading partner, with trade between the two nations being a cornerstone of Canada's economic prosperity. A significant portion of Canada's exports, including automotive products, energy, and natural resources, are destined for the American market. This trade dynamic underscores Canada's economic reliance on US demand, which directly impacts its employment, manufacturing, and overall economic growth. Moreover, the US represents a major source of direct investment in Canada, funding various sectors from manufacturing to technology, which further ties the economic fortunes of Canada to the policies and economic health of the United States. It's possible that what's happening reflects a situation known as the resource curse, which has caused problems like political unrest and slower growth in countries like Africa and South America that have lots of valuable resources. For Australia and Canada, though, it's more like their reliance on resources has made them less interested in developing industries that could compete worldwide. That might be why, apart from commodities and outdoor clothing, there aren't many big companies from Australia and Canada that have made it big globally. Their inks are particularly lacking at the cutting edge of technology. Products deemed high-tech by the World Bank, such as aerospace, computers, pharmaceuticals, scientific instruments and electrical machinery, represent more than 7% of the combined exports of OECD members, but only 4% for Canada and less than 2% for Australia. According to the world's intellectual property indicators, patents granted per 10,000 people are a mere 5.9 in Canada and 6.7 in Australia, compared to 9.9 in America and 28.2 in South Korea. This doesn't mean that Australians and Canadians lack talent. In fact, they're quite skilled, as shown by their rankings in the World Talent Ranking, where Canada sits at 13th place and Australia at 18th. They also have top-notch universities and some of the highest rates of tertiary education in the OECD. The issue lies more in their innovation systems not getting enough support. In both countries, spending on research and development is quite low, only around 1.7% and 1.8% of GDP for Canada and Australia respectively, compared to an OECD average of 2.7%. Moreover, the total investment in venture capital, which helps fund new businesses with big potential for growth, was just $8 billion in 2023 for Australia and Canada combined, and that's about half of what it was the previous year. On top of that, they're not very open to foreign investment, with strict rules, ownership limits, and other obstacles making it hard for foreigners to start businesses in these countries. However, both Australia and Canada are hotspots for immigration. Canada, especially, is notable among countries with high levels of immigration. Australia has maintained its annual immigration target at 160,000. Immigration plays a crucial role in their economies and their long-term success. Without it, both countries will age. Moreover, immigrants bring diversity, innovation, and a broad spectrum of skills, contributing to the labour market's expansion and the filling of critical skill gaps in various sectors, such as technology, healthcare, and engineering. Economically, immigrants not only increase the labour force, but also contribute to consumer demand for goods and services, stimulating economic activity. Also, Immigration significantly impacts the housing markets in both Canada and Australia, contributing to increased demand and rising property prices in major urban centres. As two of the most popular destinations for immigrants, both countries have seen their populations grow substantially due to immigration, leading to heightened demand for housing. This demand drives up real estate prices, particularly in cities like Toronto and Vancouver in Canada, and Sydney and Melbourne in Australia, where the majority of immigrants settle. However, Canada and Australia are not alone. House prices are high relative to incomes across the rich world. This chart shows the big divergence between home price growth and real disposable income in the two countries. The average home in Canada is now nearly $650,000, which is more than 9 times household income. This divergence isn't limited to Canada. Home prices have deviated from disposable income in a much larger fashion in other parts of the world, making the US look very cheap. Even though Australia and Canada share a lot in common, Australia seems to be doing better overall. They differ notably in two important economic areas: what economists call productivity performance over the long term and the growth of living standards. Productivity is a big deal because it shows how well a country's people can turn raw materials, hard work, and ideas into useful stuff. Australia has been doing really well in both of these areas for a long time. Meanwhile, Canada, along with many other wealthy countries, have seen wages stagnant for decades. Right now, Australia is ahead of Canada by $4 when it comes to productivity, which means they produce more goods and services for every hour worked. Since 1990, Australia's income growth per person has been half a percentage point higher on average compared to Canada. And when it comes to overall income growth, Australia has been beating Canada by 0.8 percentage points. These might seem like small differences, but they really stack up over time. For instance, the average income per person in Canada is around $58,000, while in Australia it's about $63,000. Australia benefited from extensive economic reforms beginning in the early 1980s and continuing through the 1990s, which opened up the economy to foreign trade and investment, deregulated markets for goods and financial services, privatized state-owned businesses, and introduced sweeping competition reforms. Put simply, the Australian economy has outperformed Canada because of investment. At least until very recently, Australia has sustained a much higher level of investment as a share of its economy. Investment spending is key to new innovations and technologies that drive productivity growth. Compared to Australians and Canadians, Americans are generally wealthier. However, there was a time when Australians and Canadians were actually doing better. In the early 2000s, their economies boomed thanks to rising prices for commodities. At one point, around the early 2010s, their GDP per person even briefly surpassed that of the United States in terms of dollars. But their fortunes are closely linked to the demand for commodities, which can be really unpredictable in the long run. Canada's heavy reliance on exporting oil and gas could face challenges due to efforts to reduce carbon emissions. On the other hand, Australia might fare better because it has large reserves of minerals like copper needed for the transition to greener technologies. However, Australia's economy could suffer from its dependence on selling commodities to China. In 2020, China started limiting imports of Australian coal, timber, and other goods, possibly in response to Australia's call for an investigation into the origins of COVID-19. Despite these restrictions, Australia managed surprisingly well, and they have since eased. However, if China's economic growth slows down in the long term, as many economists predict, it could hit Australia hard. While Australia and Canada's economic systems aren't about to collapse, their weaknesses in certain areas could cause problems down the line.